So picture this. You wake up one morning, check the markets, and see that some of the biggest names in tech are just in a free fall. Well, that's exactly what happened in the Indian IT market not too long ago. Stocks were plummeting, and pretty much everyone was asking the same question. What on earth happened overnight? Let's get into it.
So, what was the deal? That's the big question we're going to unpack here. Now, this crash wasn't because of some bad earnings report or a looming recession. Nope, the trigger was something way more subtle and, as it turns out, way more disruptive. And we're not talking about small fry companies here. We're talking about the absolute titans of the Indian IT industry: Infosys, TCS, Wipro. All of them seeing their stock prices just tumble. The whole IT index got hit, and it sent these massive shockwaves through the market. So, what caused it? Well, believe it or not, the source of all this chaos wasn't some new government policy or a market correction. It was a product launch from a US-based AI company called Anthropic, and they rolled out something that would completely change how investors saw the future of work. Anthropic rolled out this new platform called Claude Cowork. Now, the best way to wrap your head around this is to not think of it as just another tool, but to think of it as a digital employee. Seriously, you give it a task, and it just gets it done from start to finish. And check out how capable this digital employee is. It can dig through your files, edit documents, and even act like a specialist by using different plugins. So for example, you could tell it, hey, review these 50 contracts and tell me which ones expire next month. And it would just do it. No hand-holding, no step-by-step instructions. Wild. And that launch, that one demonstration of capability, triggered this huge psychological shift in the market. It was really the moment that the perception of AI started to change from being, a helpful little tool to something much, much bigger. And this is the absolute key to the whole story. For years, AI was seen as an assistant, something that helps you do your job a little bit faster. But with this launch, investors started seeing AI as a potential replacement, something that does the job for you. This shift, right here, from assistant to replacement, is what put the fear into the market. And look, this wasn't just some abstract, maybe in the future kind of fear. The impact was immediate, it was measurable, and it all started with one specific feature that Anthropic released. So, along with the main platform, Anthropic launched 11 new plugins, but it was the legal plugin that really sent a jolt through the system. I mean, it could do things that are normally done by highly paid legal teams, reviewing contracts, sorting NDAs, flagging compliance risks, the whole shebang. The reaction was instant. Global legal tech companies, big names like Thomson Reuters and LegalZoom, their stocks just tanked. We're talking 15 to 20%. This was the market screaming, okay, we see the threat, and it is very, very real. And that was the big takeaway from what happened in the US market. For investors, the writing was on the wall. The era of AI as just a helpful assistant was over. The age of AI as a replacement had officially begun. Okay. So that explains the panic in the US legal tech world. But how in the world did this news from one single AI startup manage to sink the giants of the Indian IT industry? Well, the connection is all about their business model. First off, you gotta understand where the money comes from. The vast majority of revenue for these major Indian IT firms comes from clients in the US and Europe. So they're deeply, fundamentally connected to what happens in these Western markets. And what exactly are they selling to these global companies? For the most part, it's manpower-driven services. We're talking software development, testing, support. The entire business is built on a foundation of human capital, of people doing the work. So here's how that threat breaks down. The traditional model, right, it runs on billable hours. It requires large teams of people to get projects done. But this AI model completely changes the game. I mean, if these big global companies can get the same results, maybe even better results, with just one engineer paired up with a powerful AI, why would they keep paying for these massive teams? The demand for sheer manpower could just fall off a cliff. Now, I know you might be thinking, okay, but this is all about the future, right? The tech is still super new. And you'd be right, but that's just not how the stock market works. This is the final and most critical piece of the puzzle. The stock market is a forward-looking machine. It doesn't sit around and wait for a company's revenue to actually drop. The second it sees a credible threat to future earnings, it reacts. It prices that future risk into the stock right now today. And all of this leaves us with a really powerful question, the very same one investors were asking themselves as they were hitting that sell button. If the basic unit of work is no longer a big team, but a single engineer supercharged by AI, what happens to an entire industry that was built on that old model? That is the multi-billion-dollar question that's now shaking a whole sector to its very core.